Hello everyone, this is Jeb Hanwerger from goldstocktrades.com. I wanted to give a quick update today, October 10th, 2012, after the market close on some key important developments that have been occurring over the past few months. In late July, we were concerned about this breakout in the treasury market. We saw a negative divergence between the RSI and treasuries breaking out on low volume. And we said there may be a turning point, and where we may see a rotation from the overbought treasury market, which was purported safe haven from the European debt crisis, to precious metals and miners. And in fact, what we're seeing is technical breakdown of the long-term treasury market. We've seen a break of the 50-day moving average, and then two failed attempts to regain the 50-day moving average. So we may see continued weakness in the long-term treasury market, rising interest rates, which may impact the general equity market, and the beginning of inflationary forces, and which is very bullish for precious metals and miners. Taking a look at gold, we saw this past summer come back to key support levels at 1550, and where we said that we may see a reversal, especially as the Fed signals potential QE3 and more. And we saw that in Jackson Hole, a major reversal in gold. We're testing key resistance at the 1800 level. We've had a very powerful rally from the 1550 level to the 1800 area without any significant pullback. And right now we're beginning to consolidate, and we may be going through this pullback and taking some of this overbought condition off, and we're seeing the stochastics and the overbought condition at 1800 to begin to come down. But we still see the 200-day beginning to point upwards, the 50-day pointing upwards. So it seems that the trend is moving higher in precious metals. It's becoming seen as a safe haven, and we may see a pullback to the 50-day moving average, possibly the 200-day moving average, and reach an oversold position, which would give investors what we believe a secondary buying opportunity. Taking a look at the miners, we've seen that we're seeing the first correction of the 20-day moving average for the first time since its breakout in August, where we saw a massive rally in the gold bugs index, breaking key resistance at the 450 area, and then at the 480 area, running to 520, 530, and now we're beginning to see a pullback, and we're seeing a golden cross, which is very bullish, and we may see a pullback to the 50-day moving average. And already we've worked off a overbought condition, a short-term overbought condition, and we may get another opportunity to have a secondary buy point as the 200-day begins to move from a downward slope to a flattening slope, and as we see this bullish cross, which may be indicating that the secular, the long-term trend, where we've seen this long correction from 2011, may be reversing in our favor as the treasury market begins to decline. Also, this is one of the first times that we're beginning to see the miners and bullion outperform the Dow Industrials. Taking a look at silver versus the Dow Industrial average, this is the first time in many months that silver has regained the 200-day moving average versus Dow Industrial average, and this is confirming our hypothesis and what we were saying over the summer, that we may see a rotation from the overbought bond and equity market into the commodity market. So stay tuned.